Well, HP, as we told you, was out with an earnings beat yesterday, driven in part by demand in its consumer business. Of course, people working from home has helped the company. Joining us now is Enrique Lori, President and CEO of HP, the stock of which is up 7%. And Enrique, it was certainly a very strong quarter. I know you're going to talk to us about that, but if you don't mind, I'd love to hone in on these supply shortages that your company's potentially facing that could impact your profitability in later quarters. You're seeing it on both the PC side and the printer side. Just go through that for our viewers, please. Tell us what you're seeing and what your expectations are in terms of perhaps not being able to get a hold of enough components that you need.
Good morning, David. Thank you for having me here. Before I talk about component shortages, I would like to talk about what is driving that, because it's really the strength of the demand that we are seeing, both for PCs and for printers. Just so you have in mind, the PC market this year is going to be 45% bigger than the projection that we have made only 18 months ago. And for many of the component suppliers, it is very hard to respond fast to that demand. As we said yesterday, we expect the shortages to continue at least through Q3, but all of it is reflected in the guide that we provided yesterday that drives a significant increase versus the performance that we had last year. And of course, if we find more components, we will ship more products. But at this point, we have very strong confidence in the numbers that we posted yesterday.
Yeah, and we're looking at those numbers right now. So obviously, it's a high-class problem, as we say. A great deal of demand puts strain on supply. When do you see this getting resolved?
At least we think it's going to take at least 3 more quarters, because as you have heard from other industries, there is very strong demand for components. We are driving that on PCs. There are other technology sectors that are driving that as well, and even sectors outside technology are also strengthening the demand for electronic components.
Enrique, congratulations. You always keep us up, and I think that this was the quarter that you predicted a couple of years ago, but it did seem to be accelerated by obviously work at home. How far along are we in terms of people developing an office at home, given the fact that most of the companies that I know I talk to are going with a hybrid style? You can work at home, you can work at the office. Where are we in terms of office development at home?
I think we are still in the early stages, and this is why we are confident that the results that we posted yesterday are going to be sustainable for several quarters. When we think about what is going to be the new way of working, we think it's going to be hybrid. People will be working from home, will be working from the office, and this is opening a lot of opportunities for us. Opportunities in the PC space, as more notebooks will be sold, opportunities in the print space, as companies will have to enable their employees to print at home in a secure way, and we announced some new services to support that as well. So really, this is opening opportunities for us that we think will continue over time.
You once again teased something that I think is very real for you and very exciting, which is 3D printing in microfluids. For microfluidics, you are so far ahead of almost every company in 3D printing, and yet you don't talk much about it. Can you give me whether it can be material within the next 2 or 3 years?
We talked yesterday about the growth that we are seeing in printed parts, which is within the best metric to show the progress of the industry. And as we shared, printed 3D parts grew more than 30% this quarter, which is a very relevant number. In terms of materiality, it's still a relatively small part of our company. We're a $60 billion company, and to be material, you need to be very big. So I think it's going to take more than 2 years for it to be. Yeah.
Okay. Well, Enrique, over the last 3 quarters, you've bought back the equivalent of 13% of the outstanding shares in this company. Buybacks are an important component of your capital allocation. You just described an area that you see as potentially very rewarding. Is buying back all that stock the best use of your capital?
Thanks for the question, Dave, because we are doing both. We have continued to execute on our share buyback program, which is what we committed to shareholders a year ago, but we are also using our capital for M&A. And this week, we announced a very exciting M&A in the gaming space, where we are going to be now leading the headset category for gamers, which is a growing category. And this shows that we are going to constantly look for opportunities to use our capital for M&A in our core businesses, in adjacencies, in new businesses. And we will always do that if this brings better return than buying back our stock.
So you don't think you're going to look back and regret perhaps having bought so much stock back and not devoted enough to R&D, or you simply make your allocation every year and are making your decisions based on the opportunity set you see in front of you?
We are going to be making the decisions supporting our strategy. For us to do M&A needs to support the strategies we have explained, needs to have a strong operational plan and strong financial plan. And let me remind you that we are a cash generation machine. We also announced yesterday that we expect to generate at least $4 billion of free cash flow this year. So this gives us room to continue to buy back our shares, which we think are undervalued and therefore are a good investment, and also to increase M&A if we see the right opportunities.
Shepard Smith here. Thanks for watching CNBC on YouTube.